Those retests, you get a lot of information from the cross of the fast and slow MACD, and of course the retest of the bigger moving average. So price retests, closes below the smaller moving average, in this case an 8, retests the bigger moving average, in this case a 20 cloud, right? Cool, also known as a flag, right? But I like to see it this way because now, and sometimes you're going to get the retest of the 0 line on the MACD. We don't get it here, obviously, but you will get it in other places. Now, as we get a candle that closes above previous candles, a bullish candle that closes above what has now touched and kissed and kind of moved off of that higher time frame moving average, we've got confirmation. So then again, we buy. This right here is a little janky. I wouldn't have taken it, mostly because it hasn't touched the bigger time frame and it didn't touch the 0. I need it to touch one or the other. So this, great move, but I would have missed it. But the purpose of this strategy is it gives you the original entry. And since we cannot always be on the chart for this moment, and then we come to the chart and we're like, oh my gosh, price has moved, what do we do? The retests are super significant and important. So that's everything in terms of the moving averages and the strategy on screen. In terms of the breakout strategy that I developed and built this kind of situation for, again, we're in the process of automating it. A great indicator, custom being the key word. That's what the focus I'm going for anymore is custom, meaning the user has control, because we live in such an open world that I want the people to be able to use it however the people see it. And that's kind of my personal goal for the community. But yes, the 6-figure trading coach 8 p.m. Sydney session is my strategy. It's my tool. We use it in 6FTC. We use it in Futrix. And of course, Breakout. I personally, I'm giving it all, and then I'm hopping off. So if you have questions as they come up, tell me. If not, we'll see if we can't chop this up and then make a video out of it. But anyways, breakout strategy. Yes, 6FTC, mine, 8 p.m., 9:30, Big Dog, New York, London. There's a lot of variations. Biggest thing is, again, we wanted to build this to be completely customizable, and we did that. So I personally, if I'm going to pick my time frames, I like quite a few of them. 9:30, 8 a.m., 2:30, 20 o'clock. I like all those. There's a few others that I wouldn't mind. One guy that we had on our Tuesday night call, I think he's using 6 a.m. or 5 a.m. Don't quote me. I don't want to be wrong, but sometime like that, okay? Don't ask me which one it was. And you can use this at any given time. One guy messaged me. I love him to death. He was like, look, I pop this on my chart any time of day, any time frame, and I use it. And this is the best thing I've ever had. So just so you know, customizable means customizable. I want you guys to be able to use this how and when you see fit. That is the big goal across the board. So time frames aside, obviously we're targeting New York Open and we're targeting 8 p.m. That was kind of my secret weapon. Was I wanted to use 8 p.m. because I like the way the market moves at that time. There's less volume, there's less New York control, there's less New York nonsense. So it's really, really smooth. The lines on the chart that you see now, getting to the actual breakout box, we are on oil and we're on the 1-minute time frame. But all this upper green line and lower red line, all it's telling you is it's encompassing the candles based off of how you have it set that you are on. So right now we're on the 1 minute. This is pretty much inboxing the 1 minute candle. Now we're on the 2 minute. Now this is inboxing the 2 minute. Pay attention to where these purple and blue lines are too for a second as I go up to the 5 minute. 5 minutes is not going to be dynamically different because the amount of volume in that candle is pretty close to the first 2 minutes. But now if you notice, these are a little bit further away because this is encompassing and this is inboxing that 5 minute candle. But this purple line, the target, is 1 standard deviation away from the full range of the time frame you have it on. So I'm going to say that one more time, okay? These blue and purple lines are 1 standard deviation of the full range based off of how you have it set. So all this is telling you is if I were to get out my measurement tool, don't ask me stuff, hold on. If I were to get out my measurement tool, from here to here is, and don't quote exactly, it's about 23, whatever that is, I don't trade a lot of oil, is the same size as here. See? So this range is about 23 ticks, and we have settings in there too that will give you contract sizes. It'll help you with risk. Another thing I struggled with a lot when I started futures was I didn't know how to do the risk. But that's all this is 1 range away, okay? How I'm using this, and before I pull up the box that gives us the lot sizes and what have you, how I'm using this is, as price breaks, I want to take it, okay? I want to take the break. Now, knowing, especially in New York, there's a lot of volume. You could break up, get a wick, and then poosh, right? So you gotta be careful. You really gotta be able to buy, protect, and then go, okay? Sell, protect, go. Sometimes you're gonna get knocked out. Sometimes you're gonna get this voluminous move. The market is the market. I have no control over that. But I want to go with where price is going. And if price is breaking out to the upside, I want to take that. If price is breaking down to the downside, I want to take that. If I'm entering in here, I do my management dynamically differently. And I love it. It may or may not work for you, but at the end of the day, it's going to be up to you. So I'll kind of show you. There's a lot of lines on this chart, but we didn't take a trade. So I'm going to go ahead and delete some of this stuff. We don't need it as much. So if I'm taking a trade based off of the break, remember your entry is never going to be exact. That's a fool's errand. Okay, we don't do that. That's 5. Okay, the 5 to 1 based off of using the 50%. Now, likely you didn't get a 5 to 1. Let's all be fair. But in essence, if I'm taking my entry here, I can put my stop loss below the range of the zone, and my take profit here, which is going to give me exactly a 1-to-1 risk to reward ratio. Okay, exactly a 1-to-1. And the pips, ticks, and points is going to be a little bit various. There's commissions, there's other factors. It's part of the game that we play. But it is what it is. So you can do that as the most basal way, okay? For me, that means full take profit, full stop loss. You're in, you're out, you're done, okay? You either win or you lose, and that's all. On a day like today, that's going to be a great recipe. On a lot of other days, not the best recipe. Let's all be fair. How I typically do this is if I'm taking the break, I'm going to put a hard stop loss below this zone. I typically like to have it a little bit of a way because we've seen us get wicked by a tick and then it just takes off anyways, and that sucks a lot. But I like to keep my stop loss a little bit further out and just put a hard stop loss in and around this range, right? So a little bit outside of the box. However, I'm going to get out a drawing tool. I don't know which one it is. There we go. If price is doing something like this and it wicks down and it comes and wicks down again and then takes off, I want to know that I didn't get knocked out. So for that reason, let's turn that, delete that. I think I have to turn that off, otherwise it doesn't turn off. Oh, it did not turn off. There we go. Delete. What I'm actually doing is I have a mental stop loss in and around the 50% mark, okay? Meaning if we're closing really aggressively with full body candles and no wicks below this 50%, I'm looking to exit. If we're closing below that zone, okay, aggressively with full body candles and not just wicks, I'm looking to exit. So I have a mental stop loss in and around here, especially once I'm in profit. I'm moving my stop loss up bare minimum to here, okay? And then I'm trading accordingly. So most of the time, if I bring this back down to the 1 standard range, trading like this is going to get me pretty close to about a 2-to-1 trade. Now, in real time, I don't always achieve that, no fibbing, because obviously I'm going to let it bounce around here, but I wanted to give this room to breathe. I want this to be able to pop up and wick down and then take off and still hit my target. But to give you an idea, if you're taking the break and using this as your mental stop loss and this as your take profit, that's a 2-to-1. Once you've hit that 2-to-1, you can say, hey, I'm not going to close exactly. I'm going to trail by the candle, in which case the first candle that made another low is this one right here. This is the first candle that made a lower low. So you got a 2.5-to-1. If you had it held to another level, for example, or to previous day highs, lows, or other significant areas, you get a 5.5-to-1. So there's a lot of potential here. You get one trade, you manage it well on the day, and you walk away. One trade, maybe 2, right? So that's kind of how I'm using it. Obviously, you can say, hey, I want to take a 5-minute zone, but I want to enter on the 1 minute. We have settings in there for that. I want to see what real time is doing on the actual price that I'm on the chart that I'm on. So I don't like it set up that way. Personally, you might, you do you. A lot of people are using that and they're having success and they like it. So more power to them. Last thing I'll show you is this, which actually I got to get off of this instrument because it's kind of messy on that instrument for some reason. I'm going to go here. The crude oil isn't doing the contract sizes right. But I'm going to go here to turn this on. Now you see we've got contracts. This button up here is going to let me know how much I can put on this based off of how much I want to risk. Like, so for example, if I'm going to move this to $200, okay, I only can risk 2 contracts on MGC, on gold, micro gold, right? That's all I'm allowed to risk. Now, if I know I'm going to be managing somewhere in that 50%, I can probably do 3, just, eyeballing it, knowing what I know, but it gives me a parameter. So I'm going to put this back at around 300, and we're going to keep that on for a second. Before I pop out of here, if I want this to extend maybe till 11 o'clock or something, I can change that extension a little bit further on the chart to where now it will go out further. So not a bad way to be. I kind of like it ending sooner, like at a 15, because it also tells me I'm done trading. I don't need much more than that. I don't know what time 15 is on the 5-minute, but I've made my money, or I have it, and I should be out for the day, like by the time I'm getting to here. Not that I'm perfect at that, but that's kind of my goal. So that's, another topic. What else? Other settings. If I go to, I don't have it up. I also have a strategy that will do all this for you, and it has some really cool management features that will let you kind of automate this through third-party services on TradingView. So imagine taking those trades and not having to worry about any of them. But it's really, really cool system. Really, really cool. I'm very excited about it, but I digress. Here we are. We're back on the 2-minute. For the most part, this is where I focus. We took this trade. Truth be told, I could have taken it way down here based off of my actual strategy, which we just talked about, right? Plus, I knew I was targeting the previous day's levels and previous day's close. So I could have been in this sooner just based off of my actual trading strategy. But either way, we take it here, it breaks, you hit your full target. You don't need to give it much of a room for a stop loss. In this case, this is not a short position. Long position, ta-da. I'm going to just take it to that level. Halfway. About a 2-to-1, you're done and you're out. The cool thing is, as price continues, everybody was looking for that to make a different move. We sold down just as easily. So like if you're needing 2 trades on the day, most of us don't. Getting greedy. It makes for great videos, but not for great management. Same thing, that's your 2-to-1 on the day. This one's a little tricky, but it is a great example as to why I have a mental stop loss in here and not a hard stop loss at that 50% mark. Because if I put a hard stop loss at that 50% mark, I'm going to get wicked out by ticks like 80% of the time. It's not worth doing. But I do want to pay attention to, let's say I took this entry and we pop back up. I want to pay attention to the time on the candle and how this candle is forming. I don't want to just close because I'm scared. I want to give this room to play out. And if I had, we've got plenty of money on the table. So not a bad way to be. That's 2.7, but you could got out. And most of my payouts, and most of my best progress have not been with these moves. They've been with these moves, because this move cost me money, as you saw today and it's not necessarily dollars on the account, it's the available drawdown. And without the available drawdown, even in your pro account for Take Profit Trader, you're messing yourself over. It's not a good way to be. Not at all. So I think I answered all of it. The uses are endless. The uses are truly, truly endless. You can also use this as a range. So let's say you come to the chart and this is what you see. You see this kind of consolidation. What you can do is, we're on 2 minutes. This is 7:16. You can come grab that indicator, go type in 7:16, extend the line out by 50, okay, or whatever, 40, and say, hey, just to keep me accountable, to keep me real, because in real time, it's hard to stay out of this. We all have a darn opinion. We all have a darn want. We all have, some reason to be taking a trade. But this is a box we really can't trade out of, right?